Hello, ladies and gentlemen. Today's date is Saturday, January 2025. I'll be looking at these more basics of Forex. As I've said before, I'm going to be sharing some insight of some understanding about Forex so that you'll be able to know some ideas about Forex. You don't have to trade, you don't have to kind of start trading if you don't have money left or organized, prepared for it. Okay, that is just for your choice. Whenever you are ready, it's good for you to have some ideas. So I'll be going through some basics and then let's look at trading hours. Trading hours in Forex. Trading hours. So trading hours, we have 4 hours and then we have 5 days in a week for weekdays for Forex. So there's nothing like a weekend trading for forex except if you want to trade cryptocurrency, and then that is to show all those who are trading index trading, or those ones are 24/7. But we're not talking about those ones. We're not talking about BTC. We're not talking about cryptocurrency. Okay, cryptocurrency is 24/7 as long as you have platform. So now trading hours is from midnight till midnight. From November. So it is going to be every now and then we have different sessions in the market. So when the Asian people, when they wake up, market they will open their market. Then when London also shows up, London people we also we open their markets, and then New York too we open their market. So in the Asia session, then London section, or they call it Europe session 2, and New York section, which is a dollar. New York section. So all these sections, market used to move differently because of the volume, in the market. When you are trading, there will be a lot of more volumes during the New York sessions, more than SI sections, especially when you are talking about dollars. Okay, but looking at the dollar section too, you could see clearly that market is trying to balance from the extra session, then hand over to, to continue with New York in the afternoon. So the time used to change, like extra session openings used to be 10 before, now it's now 11, and that is 11 p.m. Some 10:55 p.m. But that's when market will close. Maybe on Sunday it will open on Sunday night around 10:55 or 11. Some brokers will allow the market to move for a while before. So 11 to 11. So by 9 a.m. London will open. London used to be 8 a.m. because of the just time zone or change of time at times. So it happens in a year, at least that is just what used to happen. That's when it was changed from 10 p.m. that used to close to 11 p.m. So now, when you want to talk about pairs, some pairs move well during the day, and because of those are the things that people are, buying and selling, and there's more volume, demand, and supply for it. So that is the reason why market usually move during the in-lock section, because it's more like very hotcake session when US traders and those who are the US will wake up, and then they'll be going for work and going for to Wall Street. So, and let me look at the market manipulation. Market manipulation. So when you're talking about market manipulation, it's basically how market used to move. There are times that market there will be no news, and then there will be movement, and there will be kind of a spike. A market will move to the one direction, and then when there's news, it will not move. And at times, when it is during the extra session, you notice that pound sterling and as well as USD, GBP USD, is moving very fast, which normally shouldn't happen because it is midnight. They are all closed. So it's supposed to start operating or start moving well, moving going up or coming down during the day, around maybe 6 or 7, when the session is about to wrap up their own trading section that started at around 11 p.m. So now that's based on my own time. I'm talking about based on West Africa GMT. So in case if you are wondering that, that means that the Greenwich Mean Time. So manipulation happens because banks want to liquidate a lot of orders in the market, and they used to move the market in one direction, or they'll pretend as if they want to move market to the one direction, and they will change direction to the opposite direction. So this is what happens in the market that you should know about, that so that when you see market move a certain way, even though there's no news, even though the day shows there's no news, so it can happen that the market will just move faster, because most people think that news is what usually makes the market to move, but most times it does not really happen that way, because it's based on demand and supply, and when it happens, it happens. Either there's news or there's no news. But some news like non-farm payroll, the NFP used to be on first Friday most of the times, except when Friday is around on the first on the first, so it's likely to fall on the next Friday. So if you look at it now, market will the news trading is news used to influence market, and then based on the fact that it's more of like there's a reason why market moves like that. So market can move in one direction, like just go up in one direction without going up like this, like this, like this. So without forming higher low, higher low, without going in that direction. So that's that's what we need to understand about forex. So in case you are not into it, and if you are into it, you should understand clearly that these are things that happen in the forex in the market. So let's also look at the peers, and which peers are by tomorrow or next Wednesday I'll be coming online to discuss about forex. I'll be talking about peers. So let's look at peers. There are about 28 peers that are common, that are majorly like major peers, minor peers, and exotic peers. And then those peers, the way they operate, they're not the same, except those who have correlative pairs like GBP USD and Euro USD. They tend to move in one direction at the same time, but it's not always. So don't get it wrong, because markets GBP USD can go up while Euro USD can go down, because that is how markets functions most sometimes. So it's not going to be all the time in one direction. I've seen cases where gold goes up and then GU was coming down, and it's meant to be going in the same direction, and that's just by the way. So what are the pairs you want to choose? Now, when you start Forex, you need to know which pairs you need to select. Selection of pairs will help you to know when to trade, and most of the time when you need to trade. So if you are trading gold, or I mean, if you are trading, I'm not talking about commodities now. I don't have business with commodity because it's too volatile, and it does not really follow certain kind of patterns that will tell you that yes, this is when market is supposed to get exhausted, and at times it will keep on moving. Now, pairs, you have to decide which pairs you want to use. By the time when you try to back test or front test, whatever it is you want to test about these pairs, and this implies that GBP USD is my pair that I usually trade. I trade only GBP USD. I used to trade USD card, meaning the USD dollar and Canadian dollar. I used to do that before, but most times I don't do it all often. I only once a blue moon. But nowadays I'll be sticking to GBP USD, which that's been my trading style, because that's what I study well, that I understand it well. It's like a language that you need to understand. So the behavior most times, even when I'm losing, I know the reason I'm losing, and I can see that it's trying to do certain things before it reverses. So that's how forex works, especially pairs you want to trade. So GBP USD UPSD is one out of 28 that most brokers have because they have tons of they are different. Some have US oil, UK oil, Nasdaq, and S&P. Different brokers they have, but most brokers only have major 28 pairs. But those pairs, you don't need to trade all of them. And again, you don't need to even look at all of them because you are not in the market to be looking at the pairs. You are in the market to see how much money can you make and how much can you make out of the market. So your business is not to be trading all the pairs. You have to select one, two, or three, depending on your capacity and your interest in those pairs. So for me, but if you try to trade some pairs that are a bit volatile, and then you are trading those ones that are not volatile, like CAD, CHF, I mean, CHF, yes. If you look at it, that card CHF, for example, is very low. The liquidity is very low. It's not down fast in terms of pips because later on I will talk about pips. So move on now. So let me just wrap it up now. When you talk about forex, forex is a very volatile market, and you can easily make a lot of money and can as well lose the money. So now my advice is that you should not use your added money that you are not ready to lose because it is about investment, and then this is based on high risk, high reward, high loss. High risk, high risk, high reward, and high loss. So look at it now. Those are the things you need to know about forex. About that, it is very high risk. It's not advised. I'm not advising to go venture into it or not venture into it. I'm passing information about forex possibilities that forex is very volatile, and then you should know that you cannot risk low and expect high. Meaning that when you are buying low quantity of something, we call it volume. If you are buying something lot size, what is position size, or when you are trading. But when you are looking at it, that one, we didn't determine how much reward you get if market moves based on pips. So we look at it in that way. So you have to know this before you venture into. So these are the basics that I could maybe share with you today. I will talk more about it, other aspects. Even though I've not shown you any chart yet, yes, I'll be showing. I will soon start showing you charts on what things are happening because this is going to be interesting. So this is how I can go today. Because we'll see you next time.